Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochasticmacd.com for general trading, www.24elliottwaves.com for Elliott wave trading, www.dayprotrader.com for Fibonacci trading, fractal trading, and core value trading. Today is the 25th of April 2014, and the time in London is 12:23 p.m. In New York, 7:23 a.m. The title of this video is how to trade the Russell 2000 index. All right. In this video, we're going to discuss the best approach, the best trading strategy one should adopt if one is trading the Russell 2000 index. The first thing that I say to traders, okay, or the first thing one should know if one is trading any financial instrument is to know the current market pattern. There are three market patterns: the rising channel, right, the declining channel, and the horizontal channel from the higher time frame. So you may check the weekly chart, the monthly chart, even the yearly chart to see the market pattern. The market patterns, there are three, okay? They are different from the chart pattern, like Fibonacci patterns, okay? Inverted head and shoulder pattern, round bottom pattern, okay? All this round top back pattern, the triangle, or the either chart pattern, the market pattern commands every other patterns. Even if we are using the 13 specific, stochastic pattern or 13 specific Elliott wave pattern, the market pattern must, must prevail above or any other pattern. So if you trade against the market patterns, it's like you are fighting the whole market. And it is not something I will recommend to traders, okay? All right. So what's happening? The first thing we were going to discuss, so how the professional trading the Russell 2000. Then we go to the yearly chart. All right. According to the definition, so if it's going to go up this year, 2014, the price must display higher lows, higher high above the high of 2013. If it is not doing that, professional will not be very excited to buy the Russell 2000. They will say that is still below the high of last year, is bearish. Doesn't mean that this index cannot go up for a while, but it means that they will give priority, give precedence to, the bearish signals, until it goes above the high of last year and start displaying higher lows and higher highs, That's the only time they will start getting very excited and say that, so as you can see here, the high of 2013 is at 1167, the low of 2013 is at 849, and the median line, which is the middle line of the range of 2013, is right here, is at 1002, 1002, So we usually, if the price failed to go above the high, it will try to find a support where you start trying to go down to look for a better support. Either you see they have other line here, the short-term equilibrium price level and the long-term equilibrium price level. As you can see, the pink line here, that's the long-term equilibrium price level. That's where it finds a support before going up. But the ultimate level that the price is looking for, if it fails to go above the high of the previous section, we are the yearly chart, so this candle, if it fails to go above it, it will try to come near the median line. So when it reaches this level, we will check whether it's going to find a support or not. But before that, there are other levels, the short-term equilibrium price level and the long-term equilibrium price level. In this case, they are above the median line. They can be below it, but now they're above it. All right? So now it is below the price now at the Russell 2000 is at 1144. It's below the high of last year. So what I would say to traders, priority to sell signal. If we receive a buy signal below the high and we are taking it, we need to be very, very cautious because we know that there are other participants that will try to sell us. So we are very careful. So this is the message. Be careful if you are buying the Russell 2000 below the high of last year. The best place is around those key level. All right? But be careful. The best place to be bullish is right here above this level. Let me check how long I've been talking now because I need to manage my time carefully. Okay? The long-term equilibrium price level, note it down. Note it down. You need it this year if you are trading Russell 2000. Long-term equilibrium price level is 1099 for the Russell 2000. 1099. Note it in your book. Write it on your fridge. Write it. Okay. Some traders say to me, okay, can you tattoo it onto your hand or something? Do not use tattoo. Okay. All right. So, okay. So 1099, that's the long-term equilibrium price level. The short-term equilibrium price level is the turquoise horizontal line here. It's at 1151. For day trading, swing trading, trader must pay attention to the short-term equilibrium price level, especially day traders. All right. The equilibrium price level, the short-term equilibrium price level is the short-term fair value, the short-term intrinsic value of this financial instrument. So the long-term equilibrium price level is the long-term intrinsic value for this financial instrument, Russell 2000. But you have to understand that everything has its intrinsic value. So the price will go up, okay? And if the intrinsic value does not change, what is going to happen? You try to come back to its intrinsic value because that's the fair value. And it will pull the price back to where it belongs. Because when the price goes too far away from its intrinsic value, it's overbought to a certain degree. Until we receive a sell signal, it starts going down. It's looking to come back to correct itself to its fair value. So it means that the price saying to us, no, I shouldn't be $100 this time. In fact, my correct value is $50. I'm going back to my correct value. Okay, so to speak, okay, you get the image. So this is what we are talking about. So apart from every key level that people talk about, okay, there are other key level, resistance, support, everything else. The two key levels that you don't want to mess up with is the short-term equilibrium price level and the long-term equilibrium price level. I am the only one that knows how to calculate it. Now, traders say that, George, you're very proud. Okay, I'm very proud of that, but not arrogant, okay? All right? I'm humbly, okay, proud of it. Proud about it, okay? Proud. Very proud about it, okay? So, though I'm speaking like this to get your attention, you get the message, okay? So this is what we want to know. We know. Now, I'm going to go now to the weekly chart, and I want to show you what market pattern do we have. Look at this. What do we have? We have a rising channel. Okay, so this is the market pattern is bullish, yes or no? Yes, it's bullish, okay? Right now it's bullish. But it's in a rising channel, but it failed to display a new high above, okay, the high of last year. So though we are in a rising channel, we are failing now at this point in time, okay? At this point in time, we are failing to display a new high. So we can't afford to be bullish completely because though we are in a rising channel, we are not displaying a new high. Normally, if the price bullish is in a rising channel, it must continue to display a new high, a new high, a new high, a new high, a new high. Now we are stuck here. Why? So some people are not happy about it. So that's why I say to traders, be careful if you are buying it, okay? The mistake that a lot of traders are making, because you see now it pulled back here, people will try to buy, which is not to buy on the long-term equilibrium price level, but be careful. So what is the last thing I need to share with you? Because I don't want the video to be too long. Let's go to the 4-hour chart. What do we see? On the 4-hour chart, I want you to remember this blue line here. So there was a high. So in fact, there was this high, a lower high, a lower high, and now we are stuck below this blue line. So my message, to cut long story short, is that if you want to be bullish, okay, at least allow it to go above the blue line to come to this green zone. See, between the horizontal line and the blue line. But as long as it's stuck below this blue line, trader will try to sell it. So they'll try to sell on the edge here, pushing it down. So, but if you want to buy it, ladies and gentlemen, so suppose traders are thinking, as I showed you some trader before, you think that it's going to form a head and shoulder pattern. So what is the head and shoulder pattern? Okay. On this 4-hour chart, trader will say, okay, George, it's looking very bullish. Okay. But the message that I'm saying to you is that if you want to buy it, okay, be very, very cautious, because as long as we are stuck below the high of last year and also below this blue or diagonal line, okay, we need to proceed, okay, gently, okay? All right. So straight away we say, okay, John, it's going to form a head and shoulder pattern, an inverted head and shoulder pattern. So, okay, so they will say, okay, this is the left-hand side shoulder. So now it's going to pull it near this line. And then, George, I'm telling you, if you find a support, you're going to go up like this. And they will use, okay, it's not that we're going to discount these people, because it will be arrogant for us to completely ignore traders that are analyzing, okay, the Russell 2000 like this. So they will say, George, after the inverted head and shoulder pattern is completed, you'll be boom, the target will be at 1233. But my message to traders, even if you form the inverted head and shoulder here on the 4-hour chart, okay, and it start going up, if you want to buy it, allow it to come to the green zone. Always remember that there are traders that are selling right now this financial instrument, the Russell 2000, because the price failed to display a new high on the yearly chart. These are not ordinary market participants. These are hedge funds. These are the banks, and they know that. And they are careful if they are buying now, and they will be completely bullish until we go above the high of 2013. All right? This is the end of this short video, and I hope you have learned something from this video about how to trade the Russell 2000. A lot of ordinary traders spend their time looking at the indicators. I will say to traders, the first thing you want to check is what? The market patterns. Okay? And also the definition of the uptrend and the downtrend. In a rising channel, the price might display new higher high. If it fails to do that, we can put a question mark on that bullish momentum. If it's in a downtrend, it will display lower lows, lower high. If it fails to display a new lower low, we will put a question mark on that bearish momentum. Sometimes the price does not trend, it will be oscillating between two levels, which is another market pattern, the horizontal channel. All right? So thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders. Speak to you soon.